Hello students, I'm Apumatul, and in this session I will discuss multiple choice question on goodwill amortization. All right. So a private company or not-for-profit entity may make an accounting policy election to apply the accounting alternative. If the accounting alternative is elected, goodwill recognized in a business combination should be amortized on a straight line basis over how many years it should be amortized, over what period it should be amortized. You have four answer options. So they may make an accounting policy election to apply the accounting alternative. And what is this accounting alternative? It is that a private company or not-for-profit entity may elect to amortize goodwill. The general rule is that goodwill is not amortized, but they may elect to amortize goodwill. They may elect this alternative. They may elect this accounting alternative. So they may elect to amortize goodwill. But this election is available only to a private company or not-for-profit entity. All right. If this election is made, then goodwill is amortized, and goodwill is amortized over a period of 10 years or less than 10 years. So generally, the goodwill is amortized over a period of 10 years. But you may decide to amortize this over a period of less than 10 years. And you may amortize this over a period of less than 10 years when you justify that less than 10 years is more appropriate, that useful life is less than 10 years. The entity has to demonstrate that less than 10 years is more appropriate. In that case, amortize this over a period of less than 10 years. Otherwise, amortize this on a straight line basis over 10 years. So answer in this case is D. All right, students, I hope this is helpful. We'll connect again. Goodbye.